Alright everyone, welcome back to the channel for another Bitcoin update. In today's episode, Bitcoin Battle of Divergences, we're specifically going to be focusing on the lower time frames. I'm going to be making a video on the mid to long term for Bitcoin towards the latter half of this evening. I will be uploading that as a separate video because as you can imagine, the market structure is unchanged in the mid to higher time frames. In my past couple of videos I've been making on my channel, specifically the one I made 2 days ago, we talked about the hidden divergence that was playing out over on Bitcoin, and you can very much see that this is still in play. Now, we did also mention that we had both short-term hidden bearish divergence and we had mid-term hidden bearish divergence. In the short term, the invalidation zone was 21,880, and as you can see, we have pushed back above that today, coming up to 22,550 so far. However, this mid-term hidden bearish divergence that I was talking about over on Twitter and over on YouTube is still very much in play. As you can see, this is the mid-term hidden bearish divergence that is playing out. Hidden bearish divergence is where you can see that you've got the tops coming up here and you've got highs, lower highs, lower highs. However, we look down on the oscillators, we're looking at the RSI, and you can see that you've got highs, higher highs, and higher highs, and this is indicative that the longer this plays out, the more likely it is to roll back down to the downside. So why the title, Bitcoin Battle of Divergences? Well, because of the momentum that we've had coming into the markets in the past day or so, you can see that we've got our squeeze mom heading up, the MACD is heading up, the money flow indicator has drastically come up to the oversold region, which is making me feel like we do need to have a correction if we do continue this rally. Nonetheless, I'll talk about that in the latter half of my uploads today. Why is this battle of divergences? Well, because on the mid to higher time frames, we've got hidden bearish divergence, but because of the bullish momentum that we've had coming into the markets, spurred on by the payroll increases, which I will be talking about in a second, you can see that we have formed hidden bullish divergence. This is why we have the battle of divergences. If we do look at the 1 hourly time frame, you can see that on the price action, the price is moving to the upside, making higher lows, and the oscillator down here, the RSI, is making lower lows. This is called hidden bullish divergence, and this is the complete opposite of the mid to higher time frames that we've still got playing out, hidden bearish divergence. So as I'm sure all of you can imagine, the higher the trend, the higher the time frame, the more important and the more likely it is to play out. And at this moment in time, I still have to stick with my guns until we do break over the invalidation point, which once again I'll be reiterating and talking about in full later. Until you break above 23,350, absolutely nothing has changed, and it would be foolish to go bullish right now while we still do have these higher time frame bearish divergences playing out. It is absolutely not surprising that we have come back up to this resistance zone again, or rather, you know, we've moved this over, but we have still come up and made another lower high from this region, even if we are drawing from the wick up here, or even if we're drawing from the candle body, it doesn't matter. So that being said, let's talk about the job reports before we do jump into the reason why the markets are moving, because this move over in the payroll increases has a large proportion of why this amount of volume came in. You can see, I'll be talking about the volume separately in a second as well. Over on Coinbase though, you've got about 4,000 Bitcoin bought on a single hourly candle, and it's a lot crazier when we do head over to Binance and look at the buys against BUSD and USDT. So we'll talk about that in a second, but let's talk about the job increases. So the payroll increased by 372,000 in June, definitely more than expected as job markets defy recession fears. This is a short-term bullish signal. You can also see the average hourly earnings rose by 5.1% from a year ago. Now, why am I saying that this is only short-term bullish and not mid to higher term bullish? Because in my opinion, we are definitely entering a recession. I really don't think there's any way that we can not enter a recession within the next couple of years now. And if you're like me, if you kind of understand how these markets work, then you probably want, like myself, for the capitulation to happen like that, for the GDP growth that is going to be coming out in the next 3 weeks to be negative, because if that happens, we would be, in my opinion, in a final capitulation type moment where we're going to quickly head down. Bitcoin is going to bottom within the next couple of months, and then subsequently we can increase GDP from there, and that is likely to be where the bottom is, and that is the least bearish scenario that we can possibly have. Now, the longer we kick the can down the road, if we do have neutral to positive GDP growth coming in the next couple of weeks, then all we're going to be doing is kicking the can further down the road until once again the Fed starts tightening and we head back down to the downside. And if that does happen, then we're going to have, more room to the downside, because we probably would have had bullish continuation for a month, or maybe a couple of weeks, maybe a couple of months. But nonetheless, if we do have a big bounce back up to the 26,000 type region, then it's just going to be even more bearish when we go back down for that next leg down to the downside. You can see that we play it out time and time again. You capitulate very, very hard, very, very quickly. And instead of continuing with the breakdown, you bounce up, you have a really, really nice bounce from 25,000 all the way back up to 32,000. You lollygag, 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 break out, and it's just a fake out to the upside. And then when you do go for that next leg back down to the downside, because you had a fake out, because you elongated it as long as possible, it is going to give you more room and more momentum to go to the downside, because all the momentum indicators would have been reset. This is why this is probably the worst outcome that we possibly could have had from the job reports. Like I said, I'll be talking about this more in depth towards the latter half of this evening, but the longer we kick the can down the road, the worse this is going to get. You can also see some people are saying that the average hourly earning reports rising by 5.1% is mid to higher time frame bullish. In my opinion, it's absolutely not. In the short time frame, yes, it's good. The markets will react positively to this, but we've just increased the money supply in the US by over 2x in the past couple of years. So, when they say inflation, or they say specifically CPI, the consumer price index, is up 8.6%, that inflation is actually well above 30%. And because that is what inflation is, we subsequently know that a 5% rise in your average hourly earnings over a year, when inflation is 30%, that means your wages may be up 5.1%, but your real wages, how much you can actually buy with those wages, is down more than 25%. So like I said, I'll talk about this more in depth later, but the longer we kick the can down the road with these, BS and, not legitimate metrics that obviously the government just kind of wants to pull the strings and say these metrics like CPI, which are heavily manipulated. The longer we do stuff like this, the longer we're going to kick the can down the road. But in the lower time frames, we are starting to look good. We do have a good amount of volume coming in right now. Like I said, I really would not be getting bullish in the short term. Even in the short term, I wouldn't be getting bullish until you do take the top off around about 23,350 to 23,400. If we remove this line and get the approximate value, yeah, it's around about 350. So that is kind of what I see playing out right now. Let's talk about the volume that is coming in, because over on Binance, specifically with the BUSD pair, you can see approximately 80,000 Bitcoin has been bought today. Now, that does sound bullish, but let's head over to Binance against USDT. So how much Bitcoin has been bought over on Binance using US dollar Tether? 340,000 Bitcoin has been bought over on Binance, which is definitely an insane metric to have over here. So there is a lot of short-term bullish implications of this. If we do look at the momentum indicators on the lower time frames, it is fairly evident to me that, well, specifically if we look at the daily, start off with the daily momentum indicators are going up, and they do look like they have a tiny bit more to go to the upside. So if we do continue with this, if we do take the top off of our hidden bearish divergence, which is playing out round about, once again, 23,350, then we could get continuation up to some higher price targets. I'll talk about those in a later video today. On the daily time frame, we are seeing an increase in the squeeze momentum indicator. This is heading up to the upside relatively strongly. We definitely need to see more continuation though. The continuation in volume is looking fairly impressive today. Over on the MACD, we are heading up on the daily, and like I said, the money flow indicator could still have a small amount of money to flow into the markets before we do find this top. Now, however, on the 4-hourly time frame, you can see we talked about these levels before with this red box, your 618 Fibonacci and the 21,000 zone. This is where we needed to break above, and we did. We have broken above this. We found our new invalidation zone. So up here at, if I can mark this, 22,400. This is where you would want to break above in the short term before, even short term, we can talk about being bullish. Why am I saying short term and not short term? Because in the short term, to be bullish, once again, you would need to invalidate the hidden bearish divergence, which will still be in play until 23,350. However, the lower time frames like the 4 hour, we did see a large influx in volume, but they are starting to head down now. They're starting to head down because we have found a new invalidation zone. We bounced up once again, found the invalidation zone, came back down and back tested this orange line, which you will know is the 618 Fibonacci. We then proceeded to move up, and now we are heading back down in something which resembles an M pattern breakdown. So even in the short term, once again, 22,450 needs to be broken. However, the momentum indicators are very, very overextended because retail absolutely ran into this. Once again, how do I know this is retail? Because if you do head over to my channel, if you are a veteran, I've been keeping up with the on-chain metrics. We did a whole 20-minute video over here talking about Bitcoin and Ethereum whale watching. The retail wallets, the wallets that are holding, a small amount of Bitcoin and Ethereum, they are buying the dip like crazy and reaching new all-time highs. What are institutions doing? Institutions, protocols, lending platforms like Celsius, large money institutions, they are all selling onto retail right now. Retail is enjoying the discounted Bitcoin that has been playing out for the past couple of days or so, and they are gobbling up that discount, and that is now causing us to move to the upside and have a pretty decent gap back up. However, it does look like in the lower time frames you are heading down very, very strongly. On the 1 hourly time frame, MACD's crossed bearish. The money flow indicator is heading down very strongly. Squeeze bomb is heading down and is all the same as what I've just mentioned over on the 4 hourly time frame. In fact, if the MACD crosses bearish on the 4 hourly time frame, the money flow indicator is already heavily extended up here at 89. It makes me believe that we are going to head back down and probably come down to backtest 20,700. If we do not bounce on 20,700 and have a large impulse back to the upside and take out the previous invalidation zone at 22,400, you can basically kiss any chance of invalidating this hidden bearish divergence goodbye. So in the lower time frames, it's definitely interesting that we are having this battle of the divergences. I would really like to emphasize that, the trend is your friend. We should be looking at what's going on in the higher time frames. For example, a pattern that is playing out on the weekly time frame, the monthly time frame, the daily time frame has a lot more validity than a pattern that is playing out on the 1 second time frame, the 10-minute time frame, and subsequently the 1 hourly time frame. So considering that we have had hidden bearish divergence playing out since the 13th of June, marking a, if we drag this over, marking a 26-day hidden bearish divergence, 26 days of hidden bearish divergence. We should definitely put more weight on this than a hidden bullish divergence that has been playing out for 1 day and 5 hours. So this is basically what I see playing out on Bitcoin right now. You can't extrapolate this back further. You can extrapolate the price line back further. In fact, you can extrapolate it all the way down to here. But however, the lower highs started playing out over on the 7th of July here. You can technically drag it to here if you want. I prefer how it is drawn over here. So technically, if you want, you can say that this hidden bullish divergence rather has been playing out since this zone. In fact, if you wanted to do that, you could drag it back a little bit further, but nonetheless, whatever you draw this from, this is playing out on the 1 hourly time frame in the past day, if you want to stretch it the past couple of days. But nonetheless, what is much more important is that the hidden bearish divergence is still intact. I am impressed by the influx of volume coming in on the lower time frames. Like I said as well, the momentum indicators are calling for a move back down to the downside before we do have a move up. If we do have a move back up, I wouldn't be hoping on a move back to the upside until you invalidate the hidden bearish divergence. If we do take the top off 23,350, I will be giving you my bullish price targets on where I see Bitcoin coming up to in the short term, because like I said, if this hidden bearish divergence is invalidated at 23,350, I will have to switch to a short-term bullish bias. But while we have these hidden bearish divergences staring us down, I would not dream of thinking of going bullish right now. In fact, I'm looking I'm looking at the market, I'm not trading. I think this is a no trade zone as we have the battle of the divergences playing out. Very interesting stuff. Like I said, this is a no trade zone for me. I wouldn't be shorting, I wouldn't be longing, and I have been buying Bitcoin on spot all the way down. If you do watch my channel, you would have known that I have been saying since 25,000 I have been buying the dip on Bitcoin in $1,000 increments. I have not been buying the dip on altcoins, and I will still not buy the dip on altcoins. I do not think the dip for the bottom for altcoins is in. And also, I will make a separate video about this, but the Bitcoin dominance is once again waking up. So, you know, every single time this comes back down for a retest, people say, you know, the Bitcoin dominance is dead, the Bitcoin dominance is done, and then Bitcoin dominance comes back, retests the trend line, finds support in our Fibonacci's, and then starts heading back to the upside. So the dominance has been very, very strong today, up almost 1%. You are seeing Bitcoin somewhat in the green, and a lot of altcoins are still in the red. The majority of altcoins are in the red, which is why we're seeing the Bitcoin dominance heading up. The stock market, the dollar, they are not responding yet to the payroll increases. So I would definitely say if you are looking to trade this market, I would be waiting for the dust to settle within the next 24 hours. And I would also be waiting if you, for example, I strongly advise against longing in a bear market, just like I strongly advise shorting in a bull market. I think when you're in a bear market, the bullish price targets often don't get hit and the bearish price targets get exceeded, and it's the same on the inverse of that when you're in a bull market. So I wouldn't dream of longing, I wouldn't dream of shorting while we are having this battle of the divergences playing out. That is all I've got. I will be keeping you updated over on the hidden bullish divergence and the hidden bearish divergence. Once again, for me to become short-term bullish, 23,350 needs to be taken out, and in the lower time frames, it does look like even if we are going to break bullish, we're probably going to move back down to about 21,300, 21,400 before we do have that next move to the upside, considering how beat down the oscillators are and how overextended. We talked about this over on here. For example, you can see higher time frames, the bearish momentum is still definitely there, but in the lower time frames we are starting to head down, and it looks like once again we need to have a retest before we have any sort of continuation. So that is all I've got for Bitcoin in the lower time frames. I will be making an update on the Bitcoin dominance and the higher time frames in the next couple of hours or so. That is all I've got for Bitcoin Battle of Divergences. I hope you found some value in today's content. As I did pull up my Twitter for the hidden bearish divergence, I will once again shamelessly plug this. If you do want to follow me over on Twitter, it is here at 618_cowboy. If you do also want to join the Discord, you can find it linked in my Twitter. You will also find the Discord linked in the description down below. The Discord and the Twitter, all my socials will be attached in the description down below. So I hope to see you in the Discord, hope to see you on my Twitter, and that is all I've got for you today, my friends. As always, cowboy out. Peace.